Is it possible for a stock to do a downward dog so deep it falls to the floor? For one high-end apparel maker, yesterday's earnings report felt less like a mindful stretch and, well, more like a painful faceplant. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. So, using data from September 5th, 2025, about 7:30 a.m. Eastern, we're diving into the, let's call it post-earnings wreckage of Lululemon. The goal for this deep dive, figure out if this company's fundamentally broken or if it's maybe a premium brand just sitting on the clearance rack right now.
And it's happening in a pretty jittery market this morning. Futures are mixed. You've got tech managing to climb a bit. But the blue chips, those big established names, they're hesitant and casting a shadow over everything really is this economic thundercloud. Our research is showing Moody's, UBS economists, they're sounding recession alarms.
Oh, wow.
Yeah, one model even puts the odds at like a staggering 93% by the end of the year.
93%, that's high.
Extremely high. And that's a direct threat to consumer spending, especially for premium stuff like Lululemon sells. Plus, everyone's holding their breath for the jobs data that's due out today. That could really shake things up.
Okay, so that's the big picture, kind of gloomy. How did Lululemon itself actually do? Let's unpack those Q2 results. Broken company or temporary markdown? What's the fundamental story?
Well, on the surface, you see 7% revenue growth and you think, okay, not bad. But then you dig deeper. Comparable sales growth, that's stores open at least a year, was only 1%, just 1%.
Yeah.
And worse, it actually declined by 4% in the really critical U.S. market.
Down 4% in the U.S.
For Lululemon.
Yeah. And then the knockout punch. They lowered their financial forecast for the rest of the year. They're blaming that softness in the U.S., plus new tariff headwinds hitting them.
Okay, so that guidance cut is huge.
It really is. And it raises this big question for anyone looking at the stock. I mean, our valuation models suggest fair value could be anywhere from, say, $379, maybe up past $900.
Huge range. Right. But the stock's trading around $170 before the market opens today. So, yeah, is it broken or is this some kind of massive sale?
That 4% U.S. decline feels really significant for a brand like that. Is this just Lululemon stumbling, or are we seeing maybe a bigger shift away from premium goods because of those recession fears?
It's probably, a bit of both. The wider economic pressure, it's real. But Lululemon also has fierce competition, maybe some market saturation issues too.
The analysts, what are they saying?
Well, Evercore ISI downgraded pretty quickly. The general consensus now is sort of a lukewarm hold.
Just hold. Not exactly confidence-inspiring.
Not really. And it's telling, too, that analysts have been kind of drifting from buy to hold for a while now. It suggests, maybe a lack of strong conviction. Or maybe it's just the polite way of saying don't buy right now.
Okay, so fundamentals look shaky. Analysts are cautious. But markets aren't just numbers, right? There's psychology, sentiment. What's that story telling us? Overreaction, maybe? Or is the drop justified?
The sentiment story. It's kind of a tale of two opinions here.
You've got your professional pessimists, the short sellers. About 8% of the shares are sold short. These are folks actively betting the price will fall further. They're feeling pretty good today, I imagine.
Yeah, I bet.
But interestingly, the options market before the report was surprisingly calm. The put-call ratio was basically 1.0, neutral.
So equal bets on it going up or down. They didn't see this coming.
Seems like many didn't anticipate this severe drop. But looking at our research now, the key options data shows a lot of bearish bets, puts concentrated right at the $170 price level.
So that's the key spot.
Exactly. That's become the definitive line in the sand for trading today, maybe this week.
Okay, so the shorts are piling on at $170, but the broader options market was caught flat-footed. Let's turn to the charts. What does the technical story say? Broken. Clearance.
The charts are pretty stark, honestly. You had a long-term downward trend already in place. There was a bit of a rally recently, but yesterday's news just completely shattered that. The dominant negative trend is firmly back in charge.
Okay, and volume. Where's the money flowing? That's interesting, too. Before the report, money was actually flowing into the stock, but after hours, a tidal wave of selling.
Institutions heading for the exit.
Looks like it, yeah. Big players rushing out. And momentum. Any upward energy it had. Completely extinguished.
Like you're hitting a wall.
Yeah, or like a car engine seizing up and slamming into reverse.
Yeah.
Just gone. And volatility. The stock was like a coiled spring. Earnings released that energy. Expect sharp moves, big swings.
Wow. Okay. That's a lot of red flags across the board.
Yeah.
Fundamentals, sentiment leaning negative, technicals, screaming danger. So connecting all this, What's our strategic outlook? Where does Lululemon go from here in the next few sessions?
Based on our research, the verdict has to be a bearish outlook for the immediate future for the coming sessions.
Makes sense.
The catalysts are just overwhelmingly negative right now. You've got the company's own lowered guidance, this hostile economic backdrop for luxury or premium brands, and the technical picture confirming the breakdown. Short sellers smell blood in the water. They're likely going to press their advantage.
So where's the battleground?
It's all about that $170 level. That's where the fight's going to be this week.
Okay.
The bearish scenario. If sellers push it decisively below $170, honestly, there isn't much obvious support underneath to stop a further fall.
And the bullish case? Is there one?
It's looking difficult. Buyers have to hold that $170 line. They need to defend it, build some kind of base there. If they can manage that, maybe get a relief rally, perhaps back towards the 190s to fill that gap. But that old closing price, around 206 price, that used to be support. Now it's like a distant resistance ceiling.
Yeah.
Long way back up.
Yeah, it feels miles away right now. It really seems like this Lululemon situation highlights something bigger, doesn't it? It's a test for that whole premium discretionary space. The market seems to be aggressively rethinking what aspirational even means when recession talk is this loud. Is this just a temporary blip for consumers, or are people really starting to question paying top dollar? It seems even the most flexible yoga pants can't quite stretch far enough to cover a guidance cut and a slowdown in the US. For now, Lululemon is definitely in a very, very uncomfortable position. Okay, that's all for this deep dive. Remember, this is for informational purposes only. It isn't financial advice. Always do your own research or talk to qualified financial advisors before making investment decisions. Thanks for tuning in. Catch you in the next one.